Hey guys, what's going on? It's a Global Rabbit now. I'm bringing you the latest episode to the channel. Hey guys, what's going on? It's a Global Rabbit now. I'm bringing you the latest episode to the channel. Now today we're going to look at something a little bit differently. We're not going to actually take a look at crypto. We're actually going to look at some core principles when it comes to trading and investing in general within any sort of market. So I'm going to talk about the eighth wonder of the world according to Albert Einstein, which is compound interest here. You can see one of the latest tweets that I posted yesterday. If you're not already following, make sure you do so at the Block Bull. So, over here, Albert Einstein, we can all agree, is probably one of the smartest men to ever grace the planet. However, he's come out with a couple of quotes. So, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. And I feel like there's not enough people in this space that actually kind of talk about the element of compound interest within trading and in investing. A lot of the Twitter and a lot of the accounts obviously publishing either the news or they're publishing the charts. Obviously, you know, the TA guys, very similar to myself, but nobody ever talks about the main core principle of reinvesting. It's exactly the same. It's, you know, like a business. It's almost like a snowball. Obviously, you start off small, you get bigger and bigger and bigger until it builds a massive snowman. Do you know what I'm saying? So this is pretty much where we're at, guys. When we need to become successful in the markets, we need to stop waiting for these large big moves. If you're solely just doing investing, that's fair enough, but if you are wanting to make capital on a daily basis, if you're swing trading, for example, on the weekly and the higher time frames like the monthly, then trading is what you need to be doing. But you ain't gonna make a lot of money just putting your money in, entering and, you know, hoping for the best. So what we're going to be doing is going to be targeting some lower percentages. So I'm going to take you through the daily compound interest calculator here. But before that, I just want to put out some education there as well, because in the markets, predominantly in the Forex markets, which is trading currencies, whether it be the dollar against the British pound, the Japanese yen, and then Chinese yuan, for example. What they'll do is, there's 10 major players within the Forex market. So this is a breakdown here you can see on this particular website. Top 10 players in the Forex market by global market share. So I believe the Forex market is worth, I think it's worth about 6 trillion. I've not Googled it recently, but I'm sure it's worth $6 trillion per day. That's how much is traded within, you know, currencies trading from one to one. But these are the main players. So obviously you got JP Morgan there with 11.4% market share, UBS, Deutsche Bank, XTX, Citibank, Jump Trading, Goldman Sachs, Bank of America, State Street, HSBC. So this is a big club in the Forex markets. So when we're talking about institutional traders, we're predominantly talking about the top 10 here. So these guys hire the best mathematicians and also the best IT tech guys in the business to build algorithms. Now, we've probably all heard about Aladdin, which is implemented by BlackRock. So Aladdin is BlackRock's technology, AI, which is obviously based on mathematics, and obviously AI to enhance the maths as well, to gauge where retail traders get in and out of the markets, and obviously the most efficient way in order to make profit. So all these guys are pretty much using the same technology, and even though they're separate entities, essentially they're one big club. And guess what? Me and you ain't in it. We ain't in it. So it's these guys, whether it's in the crypto, whether it's in the Forex, these guys control the liquidity. So it's basically us against AI and Harvard students. Okay. Anyway, go into this YouTube video here. I recommend you guys, to get a better understanding of the markets and how the markets actually work mathematically, watch this famous mathematician. This is Jim Simmons. Okay, you have to watch it anyway. If you got 23 minutes of your time, make sure you watch it. It's very important. Again, he was one of the top professors in mathematics at Harvard. So what he did, he managed to crack Wall Street. And in this video, I don't know whereabouts he talks about it. He's got all these chapters here. He talks about here the Euler characteristics. Now, Euler was another famous mathematician. Okay, so I'd advise you to watch that chapter in particular, because this is how markets move. So they'll move in one direction, move back down, and then you'll get the three. So it'll move 1, 2, 3. So you usually get 3 waves, and that's exactly what happens in the Elliott wave count when you get an A, B, C correction. So you can kind of, once you've got wave A and wave B, you can kind of predict where wave C is going. And if you can learn how to identify that in the markets, that is your edge. Okay, so if you come back down here, I'll also take you just back to my tweet here, which I talked about here, starting with an initial investment of $1,800. So what I would be looking to do is looking for a daily gain of 3.8%. Now we can all agree that isn't massive. That isn't massive at all. That is achievable, and it's also realistic. 3.8% daily gains in the market compounded. So if we use this principle from Albert Einstein, compound interest is the greatest invention the world has ever produced. So this is your edge. You need to make small and little gains and be consistent with that. Okay, we're not looking for this 10, 20, 30x, which is what everyone's looking for. In the interim, you need to be trading and learn how to trade. There's plenty of courses out there, but I don't recommend paying anything. You know, there's plenty of great content out there. You know, I'm self-taught as well over, you know, a 10, 12 year period. And it will take you 3 or 4 years to become profitable, but this will be your sort of foundation, knowing that A, the markets are rigged with these guys and you're up against the very best in the world. You know, there's not $6 trillion markets for no reason. They're not going to give you money for nothing. And you've got to sacrifice and put your head on the block, put your hard-earned money into the markets to try and extract money in return off these guys. That's how difficult it is. You know, people make it look easy, like they'll post reels and TikToks on Lamborghinis, and then they're on jet skis in Dubai eating 5, 6, 7-star restaurants with all these like hot blondes. It just doesn't happen. Fortunately, I have found a very good strategy. I ain't going to share it today. I may save it for another video, because like I said, it's taken me 10 to 12 years to come to that strategy. And I ain't monetized. I do not earn a penny off YouTube. I do this just as a bit of a hobby, to keep myself entertained and keep the public entertained, and it gives me something to do rather than just sat around watching Netflix all day. Again, this is more evidence. Out of those top 10 banks, 6 of these, I remember this really well actually, this is back in 2014, 6 of them collectively were fined $2.6 billion by UK and US regulators over the traders' attempted manipulation of Forex exchange rates. So within the Forex market, these bad boys here, HSBC, let's name and shame them, HSBC, Royal Bank of Scotland, Swiss Bank UBS, and JP Morgan Chase, Citibank and Bank of America. So these guys are corrupt as hell. When you place any trade, who are you trading it with? You're placing trades in your brokerage account. Do you not think they know where you're placing your stops? They know, they have order books. They know exactly where majority of the stops are, and everybody will place their stops 1 or 2 ticks below swing highs or swing lows. So the price always moves in there. And a top tip for you guys, if you want to get good entries, you need to be placing your entries, whether you're shorting or long in the market, you need to be placing your entries at swing highs or swing lows. You shouldn't be placing any stops. And this is another thing as well, don't get me started on stop losses either, because stop losses are a psychological mind beep. Do you know what I'm saying? Everyone on YouTube, any sort of course, they'll all teach you risk management, stop loss. It's not a stop loss at all. Why they label it a stop loss, I have no idea. It's called a guaranteed loss. If it hits your stop loss, you are losing. You lose your position. End of. Now, markets always reverse, and like I say, I will show you guys like snippets of how I trade the market, but ultimately, your goal is to make that 3.8%. So let's come back over to the daily compound interest calculator. So, for example, I don't know, let's start with $2,000, for example. And then we're going to go in like 3.8%. I know for a fact you can get a 3.8% daily return off an investment, okay? Because like I said, I've been in the markets long enough. Obviously, when you get to more capital, you are more defensive and you aren't going to be taking unnecessary risks. Once you get to a certain level, you go into defensive mode. But again, you could keep going and going and going if you really wanted to. So let's just compound this $2,000, 3.8%. Forex markets predominantly. You could do this with crypto. Crypto is obviously open 7 days a week, but I've never really traded crypto. I do it from time to time, but I find Forex markets are more manipulated. And I think because I've just been in the markets longer with Forex, like I say, I've been in 10, 12 years, I kind of studied the behaviour and I know like the sort of moves they do. So I'm more comfortable trading within the Forex markets. Okay, so let's put 6 months. Include all days. We're going to say no because obviously the Forex market's only open to Monday to Friday. Okay, so if we're making 3.8% Monday and then rolling the profits Tuesday, Wednesday, Thursday, Friday, we're reinvesting all of it. Okay, let's just calculate that, what we'd have in 6 months. So you'd have $264,000, and that's just with an initial stake of $2,000. Okay, which is crazy. Now, if I just bump that up to say 7, look at that massive jump there. So we near enough got $380,000 off $2,000 just by being consistent for 7 years. You know, this is why I never. People always judge people for having work and that. You know, you get all these like big bollocks. Do you know what I mean? Like, oh yeah, I don't need a job. You know, I'm doing that well. I can live off my passive income. You know, I've got nodes. I'm invested in crypto. I'm staking my crypto. I'm making like 30% APY. Lock-up period of like 30 days. It's like, just chip away. Anybody can start here. You know, it don't have to be 2,000. Even $500, you'd be amazed at what you could earn. Okay. Right, let's just take this up to 8. So what are we on at the moment? So with 7 months consistency, we're up to 580,000. Do you know what I mean? An extra 4 weeks. This is the power of compound interest, which Albert Einstein talks about. Look, that is a it only takes 4 weeks to make that massive jump. Yeah, let's just go back to 7. You know, I've been trading for 7 months. 580. Is that double? It's pretty much. It's almost double, isn't it? Let's be honest. You've gone from 580k all the way up to $1.36 million. That's off $2,000 within 8 months. It's just absolutely crazy. Let's just play it out over 12 months. 33, 34 million. This is what I mean with consistency. This is why you got to keep chipping away. But obviously, when you start getting to the higher figures like $1 million, $2 million, you ain't going to want to be betting or using a full account. You're obviously going to mitigate risk because anything pretty much you can do. Whatever you got with 33 million, you can do with 2 or 3 million, can't you? Let's be honest. Because by the time you bought a house and bought a nice car, what more do you need money for? You know, it's just a means of value to buy yourself a coffee or have a beer with the lads when you go to one of these, football games or whatever you do, ice hockey, basketball, whatever it be. So that's just some food for thought, guys. So just a quick challenge. See if you guys can devise a strategy to even just execute and kind of make 3.8%. per day if you can. It don't have to be 3.8%, you know, you could just make 2.5%. And you know, you might have $10,000. You might have to speak to your wife first before you do this. Again, 6.3. So that's like more realistic over 12 months, starting with 10 grand. It's only 2.5%. Doesn't sound like a lot, but if you keep chipping away and reinvesting Monday, Tuesday, Wednesday, Thursday, Friday, you will be looking at 6.3%. Numbers do not lie. Mathematics. Look at that percentage profit. Nearly 63,000% within the year. That's just off 2.5%. Anyway, guys, I'm going to leave it there. If you've got any questions, leave them in the comments. If you're not already subscribed, please consider subscribing. If you enjoyed the content, please hit the like button. I shall see you next time, guys. Block Bull out.